All right, what's great, everybody? Today's a beautiful day. It's a day we never seen before and a day we'll never ever see again. I'm making this video real quick to go over the moves that we caught today on gold. So my name is Eddie One Take. This is trading for the trappers. You already know, take risks and profit. All we do is numbers. So let's look at this and keep it very simple. I got the chart marked up already, but what I'm gonna do is go ahead and save it, and I'm gonna delete everything. Show you exactly how we caught the move today. So if we look at the daily time frame to get our overall bias, we can see that this market had a low here, had a low here, and had a low here, and none of these lows got taken out. Well, at this time, this was the low. These lows never got taken out. These lows never got taken out. These lows never got taken out. So should I put it in replay mode? Yeah, let me just do replay mode. Alright, so how would we have caught this move? Well, we can see that the lows are not being taken out, but the highs are. See, there was a high here that's taken out. A high here takes out this high. These highs here take out this high. So my bias is bullish. I think the market is going to go up, but the question is, where do I get in the market? How do I find the best entry to get into the market to get that buy position? And then where would my target be? So if you know anything about how we trade, we trade market structure, price action, market structure. Market structure deals with liquidity and disproportion. So keeping that in mind, what we're going to do is look for liquidity and disproportion from the daily time frame. And very simply, I'm going to draw a horizontal box in this area right here that pushes up above this last high and this last high before it starts pulling back. And when I do that, I can see that the market left a gap here. See how this last high, this disproportionate candle, and this last low, there's space in between there. There's a gap, and that gap is a good area for market makers to come back up and get the buy. Now, I'm going to do my best to keep this video simple and short. So I got this gap identified, and this is a daily gap. Just so we have it identified, I'm going to write it out. Okay, we got a daily gap. Now, cool. Below this daily gap is a low in price right here. So let me identify that with a horizontal line. And then I have highs up here. Okay, and I see these lows are obviously down here. And then the price is going to open here where it closed yesterday, right? So I'll make this white so we know that this is the daily opening. Now there are a bunch of other things that we use to get in on this price, which I'll probably try to show you within this next 10 minutes. But I only got a gap drawn, and I have a level of liquidity down here, a level of liquidity up here, and the daily open and close. The daily close of the last candle and the daily open of the candle that's about to present. Okay, so what I also like to do is I'm going to draw fibs. Since I'm on a higher time frame like the daily and I'm not looking for entries, I'm going to draw it from the wicks. If I was looking for entries, I would draw it from the bodies on smaller time frames. So I'm on a higher time frame, and just looking at a higher time frame, I can see that. Let me bring this in a little. My bad. It's tweaking on me real quick. I'm OCD sometimes, so forgive me real quick. My chart's got to be precise. All right. I just like my charts that way, to be clean and precise, because it just helps when you're trading. It's already enough emotions attached to trading, so whatever you can do to make it more robotic and having to think less is good. So I think this market is bullish at this time. I think this just was a retest, and they're going to keep going up. Now, the market closed here and it's about to open. So my bias is daily. Let's drop down to the 1 hour to see how we would have been able to catch the move. Let me replay this real quick. Right here. Cool. So I had a markup drawn yesterday. Let me see if I can. Did I save it? Give me 2 seconds. I'm about to pull up the markup real quick and then put it on the screen to show you what we were looking at yesterday before the move happened, and then to confirm how we were able to catch the move today. Today's move went for like 200 pips, easy. So, excuse me, multitasking. All right, I got it. Let me upload this picture real quick so I can show you the markup that we did. We called this out in the Discord. If you're not tapped into the Discord, make sure you go ahead and do that to get educated and not miss out on any trades. The image you pasted is way too large. Okay. Image is required. I don't know if they're gonna let me post it because they're saying the image is too large. Okay, not a problem. But we called this out yesterday, like when this price was starting to come down. We had like gaps drawn in here, and we'll identify that in a second. But we can see I only have a few lines drawn on my chart, and here they are right here. Five items, excuse me. So we're keeping it very simple. Now, if we are bullish overall on a higher time frame, what would we be looking for in order to get our move? Well, for one, I'm on an hour and I've already identified liquidity up here from when the market made a high yesterday, and then liquidity is also down here at this blue line from July 10th, right? And then I also see that we have equal lows here, but this level of liquidity was taken out by this because this traded lower, and they also came into the gap, but they did not close below it. So we were expecting price to continue dropping down, and when price was dropping down, we were expecting it to come into a discounted area for it to go back up. So let's show you how we caught the move. This is all playing out. This is all Asian session, right? So we have this 8 a.m. candle, 12 a.m. candle. I'm gonna put 12 midnight open. The reason why this candle is important is because if the price trades above it and then below it, you can expect a sell for London session, right? Your bias may be a sell for London session. So we seen price staying below the 12 midnight and also the opening candle. So we were heavy on the sells when the market opened. I think we definitely caught some of these sells too. Yeah, we caught some of these sells. I think at like 30, 40. I'm not 100% about the exact price, but we definitely caught some of these sells in here. And then we got out at these lows, but look at where the price went, right? It broke through this daily gap that it made, took out this low, came into the 618 retracement level, and it gave us a 71% discount. Also taking out this low, right? So when it took out this low, they had enough money to start driving the price back up. And in comparison from this low to this high, this is about 70% off, which is good for the bankers, right? 50% is fair value, but below 50%, if you're looking for a buy, is really, really good for the bankers. So we're on 9 minutes. I'm about to wrap this video up. I'm trying to keep it under 15. I wanted to keep it under 10, but let's get it, you know? So once we seen the price come down, break through the gap, tap the structure. Let me actually send this back a little bit because I'm gonna drop down to a smaller time frame. Once we seen those things happen, we drop down to a smaller time frame, and then you'll see exactly how we caught the trade, what we looked for, because some people, I know they struggle with entries. I'll show you exactly what we looked for and the time we got in the trade and everything like that. Now, you could have been selling all the way down. That's cool, but we were waiting for the big move. We seen price have this engulfing candle drop to the downside at around 8:30, right? That was the 8:30 candle. You don't want to be trading that. you want to wait a second. You see price takes out the low at 33.10.20, and then let's watch what happens. What time is this? This was at 9 o'clock. We got in our trade a little bit later. So we can see after this drop happens and they take out this low, the algorithm kicks in. Once they took out that low and they started retracing, the algorithm kicks in, and you can see they came up 50%. Now, how do we know they won't keep going down, right, to this take profit? We don't. We have to wait for more data. So that's why we don't trade that early. We let all this stuff happen and then take our move. But see price starting to go back up to fill in the gap, right? That's 15. So we caught our trade definitely down here. Let me take it back a little bit because that's the 15-minute time frame. Let me show you. We were on the 5-minute, even down to the 1 minute. Yeah. So we were here. We seen price come down here, take out this low. Yesterday's the July 10th low. Once that price got taken out, look at how the market, when it came down, it created a gap right here between this low and this high. The market created a gap. Now look at how the price trades higher, right? The body of this candle closes above all of these bodies. The algorithm kicks in and the price starts retracing, right? Once the price starts retracing, it retraces back into a gap for the market makers to get a better price to buy. So this was entry 1, but I missed this. I kind of got up a little bit late. I got up at like 9:30, so I had already missed this. But look, this was the first move, right? Price showing a change in character. We can draw fibs out. My bad, I got my magnet on. We could draw fibs out, and I probably got like 3 minutes left, so I'm trying to show you in 3 minutes. Here, price pops up, comes back in, 70% retracement, 60% retracement, 50% retracement. You definitely could have got in here and took it up, but since I missed that, this is what we did, and I'll play it out in a second. Price continued to go up, so we waited for some type of retracement back into where you can see this push up. We waited for some type of retracement back into that. As you can see, it gave it to us perfect. That's why you got to be patient, right? 9:25, 9:30, it started painting out what we were looking for. So once we seen that, I think we got in a little bit early. I think, yeah, we got in around 9 something, I think. Let me double check. No. It played out a little bit more, right? It retested. So this is just getting people into the sell, right? They seen this big move. If they missed it, it looks like it's going back down again. All of these people are getting caught in the sell, but we are already bullish on this, and the price the low has been taken out from the other days. So then, what's this, 3:30? I know we got in at like 3:20 something, so let's see. All right. So we got in. Hold on, let me take the exact price we got in. My bad, yo. My bad. 33.17 at 42. 9:42. 9:42. 42. 33.17. Says 9:42. Hold on, 9:42. 16:42. Yeah, 9:42. All right. Was it 10:06? Sometimes the times confuse me, but I know that we got in like around. Is that 49? I know we got in like around here at 33.17, right? And the reason we got in here is because of this bullish movement that took out this high and never took out any of these lows. I can erase this fibs right here. Never took out any of these lows. You also have market structure here for added confirmation. Right here, market structure painting out multiple touches at this level. Price using it as support, and then breaks through. Now it's resistance, and now it's support. And then once we seen this pop, we grabbed our fibs, And this is how we got our entry. This low to this high, came back down, gave us almost an 80% discount, 70% discount, 60% discount, popped up, and then here gave us that perfect 50 at 50% retracement at 950. So here's the trade. You're gonna go long. Your entry is there. Your stop loss is either right there at 10 pips or below this zone at 228 pips. And then your first take profit would be these highs right here for 120 pips. Your second take profit would be at these highs right here at 200 pips, about 200 pips. So let's just play that out, and then I'll be done with the video. It's 15 minutes right now, but this is what it looked like. Boom, right here. All right, cool. So let's just say price is like that. We get in. Stop loss is below this low or below this low. I would do like below that low. Keep my risk very, very low and do my 2,200 pips there, right above the high. All right, cool. Now let's play this out and watch how this trade manifested today. And this video will be over. It will be a wrap. We had very slight drawdown, and you can see price just kind of took its time and worked its way up. We stayed in profit the whole time, scaled out of our positions on the way up. And look at how beautifully price is moving when the algorithm kicks in. Took its time today. It didn't shoot up just like yesterday, but took its time. Price took out those highs right here. And then the algorithm kicked in. They retraced a little bit and continue to drive the price up. Look at how beautiful that is. Gave you some retracement here back into this candle before it continued going up. And this was this trade took a little bit long, but you definitely ate good off of it, risking very low, risking 200 to make 2,000. All right, we got some pullback here, maybe to trade into this gap, right? And that's exactly what they did. Traded right back into that gap, used it as support, made a double bottom. You can see the head and shoulders here for the retail traders to get them caught in the sell. And then your take profit gets hit. You paid $1,900, risking 300. That was today's trade. Same thing with yesterday. We waited for the price to come down, take out a low, which it did. We got down on the minute, real surgical. We seen price have a impulsive move, and all we did was check the gap, grab our fibs, watch the levels, and get in. Time and price, liquidity and disproportion. Stop loss really tight below this last low. You can do 20 pips, 15 to 20 pips, and your TP would have been the daily highs from today. TP1, TP2, TP3, which it went crazy, obviously. 540 pips, risking $200. So that's how we trade. Liquidity disproportion, very simple. You can see how much I have on my charts. This is how much I had on my charts when we took the trade, because if you know what you're looking for, you don't have to have a bunch of shit on your charts to confuse you and things like that. That's the video. I said 10 minutes. I did 10 minutes over, but I hope these videos are educating y'all, man. I hope y'all learning something and tap in. You already know. It's your boy Eddie One Take. All we do is numbers trading for the trappers. It's a day we never seen before and a day we'll never ever see again. That makes it unique and beautiful. So stay productive. All we do is numbers. I'm signing out. Yeah, let's get it.